Patu Keswani, who is the CMD at Lemon Tree Hotels, joins us on the show right now. Mr. Keswani, afternoon. Tell us about your new hotel, firstly, in the Pune area. Are expansion plans on track?
Yes, expansion plans are on track. Actually, when we filed our our prospectus before our IPO a few months ago, we had stated that Pune would open in December. So the good news is, of course, for us that we opened it in the start of December. It's a 200-room hotel right in the city center of Pune. Our investment is about 200 crores in it. It's one of our owned hotels. So we are very confident with the market conditions in Pune, the supply conditions, the demand conditions, that it will do very well. And that's, of course, in the next few months we are opening 3 more owned hotels. One is in Bombay, 300 rooms, which will open in end January. And then in Calcutta, a 140-room hotel in April. And in Udaipur, a 140-room hotel also in H1 next year. So overall, we are opening about 800 rooms, close to about 1,000 crores of investment. And looking at the cycle today in the hotel industry, we are very confident that these hotels will stabilize fast and generate significant amounts of EBITDA for us.
Okay. Q2 profits were helped by a sharp rise in other income. What drove earnings this quarter?
Well, you see, I'd like to separate the two. Earnings in this quarter or this half year were driven primarily by a small increase in occupancy of about 230 BPS and a 9% increase in rates. As you know, in our business, in the hotel business, depreciation is actually just a tax benefit because hotels, unlike most other assets, are appreciating assets. So depreciation in our business, as I said, is always, when we look at our metrics, added back to PAT. Now, last year, because of a lot of new hotels that we had opened in the previous 2 years, which were not stable, we had very high depreciation and interest costs. And therefore, at a PAT level, we were negative last year in H1. And at a cash profit level, we were significantly positive. This year, both PAT and cash profits have improved enormously. In fact, from a negative, a loss last year, we went to a PAT positive this year. And with, in terms of cash profit, I think cash profits grew 80%. Our other income was not significant. It was only about 5 crores, and that was due to one hotel which we had planned to buy a few years ago. Ultimately the owner returned the advance we had paid him with some interest. So the other income that was reflected in H1 was that repayment.
Okay. You also saw a very healthy 26% growth in your EBITDA. What is the outlook then on margins and the operational performance that you are capable of clocking in the next few quarters?
Well, I don't want to give any form of guidance by and large, but let me just put it this way. See, the hotel business is a highly cyclical business. So in the bad years, which incidentally were 2008, 2009 on till about 2016, average occupancy in India was under 60%. So EBITDA margins, even in our case, EBITDA margins were depressed and were in the mid-20s, so say 25%. Now, the minute the occupancy in a market or in India starts crossing 65 to 68%, then with a lag effect, prices go up significantly. So finally, after, as I said, the last 10 years, occupancies in India have now started climbing, and I think this year will be in the late 60s, perhaps 68, 69%. So with a lag effect, I expect next year pricing to shoot up dramatically. In fact, we have already noticed that in certain markets like Delhi, where I am sitting right now, Gurgaon and say Aurangabad, I mean, it's a small market, but there have been significant price hikes because supply is so much less than demand. I expect across India, supply will be less than demand within the next year or two. So across all markets. What does this mean? It means prices go up, and that goes straight down to EBITDA and EBITDA margins. So very broadly, I would expect EBITDA margins to increase. Like I think in H1, our EBITDA margin was nearly 30%. I would expect it, well, in the next year and a half, two, to cross 40 on a much larger base of income.
Okay, we leave it at that.
Yeah, because we are opening so many hotels, so it's actually a triple whammy in our business.
Okay. Thanks very much.
To summarize, we are opening many more rooms. We are opening.
No, please give us your
Hello?
closing comments. Give us your closing comments.
Yeah. Well, in the case of Lemon Tree Hotels, we are opening a very large number of rooms in the next 12 months. We expect supply to, demand to be much more than supply. We expect repricing to happen across India. So the three things I see happening is prices going up, of course our supply coming in, and demand picking up, and therefore from our income perspective we will have a double whammy, which is prices up and much more supply, which is stable. And from the third whammy is, of course, that costs more or less remain stable. So all the increase in revenue, most of it, say 80%, will go straight to the bottom line.
Thanks very much for joining us and giving us those details. We wish you the very best for the